Hey everybody, it's Eric with Low VA Rates. Today we're going to talk about when a VA loan is not your best option for a mortgage. Now I know that might be catching some of our followers offline because we love the VA loan here, but there are situations where the VA loan might not be the best option. Now in my humble opinion, it's almost always the right decision for qualified service members or veterans. However, there might be a situation, a little measly 1%, where that's not going to be the case. And so in today's video, we're going to cover what those situations are. I just wanted to give you a quick reminder. I am not a licensed loan officer. However, I'm here to help educate you. And if you do have further questions, I'm going to be very happy to connect you with one of our licensed loan officers here at Low VA Rates who will go into a much more in-depth discussion about your unique situation and your mortgage needs. Now, if you couldn't tell, it's Friday. Everybody knows when it's Friday, but why am I wearing red? Because every single Friday here at Low VA Rates, we put on our red swag. We'd love to give you some red swag. There are videos on our YouTube page. Speaking of our YouTube page, down there to your right, there should be a red subscribe button, follow, whatever it is. Keep in touch with us on YouTube because every single week we're putting out very informative videos just like this. And why do we wear red here? If I failed to mention that already, it's because we love our veterans. We love this country. It's an outward expression of an inward feeling that we have here. So let's get right into it. Again, we're talking about these very small situations when a VA loan isn't the best option. It does happen, okay? That's what we're going to talk about. I love vacationing. I love going to the beach, heading into the mountains. I love going to the city to eat. Basically, if I can go on a vacation, I'm going to take advantage of it. Let's say I find the place that I really, really love and I want to buy a vacation home there. Or you want to buy a vacation home somewhere. You cannot use a VA loan to buy a vacation home, okay? No vacation homes. Not allowed. One of the biggest points the VA makes when doing their VA home loan program is the loan must be used to purchase a property that will serve as your primary residence. So if the home you're planning on buying will only be lived in seasonally or part-time, or you're going to VRBO it, Airbnb it to some renters, cannot use a VA loan to finance it. So in this situation, right? You love going to Hawaii. You feel like it might be a great investment to buy a house there and rent it out. You're not going to be able to use your VA benefits. Now, before I forget to say this, because you never know where my mind's going to go, we do non-VA loans here at Low VA Rates. So don't hit pause, don't exit out. Just because we specialize in VA loans does not mean we cannot help you with a vacation home, mortgage. Second situation, okay? Fixer upper. Probably not your best bet to use a VA loan if you're doing a fixer-upper. Now, all over the TV these days on I don't know what stations they are because I don't watch them a ton, but I see them when I'm scrolling through the channels. People love these fixer-upper shows. It's popular to buy a home that's run down and then to try to fix it up and make some money, okay? In order to use a VA loan to buy a fixer-upper, the property has to meet the minimum property requirements, or MPRs. We have videos out there on our YouTube page that go into much more detail about the VA's minimum property requirements. And this happens during the appraisal process. But if you've been inspired by these TV shows that I was talking about and you want to go tackle home renovation, there's a good chance the VA loan's just not going to work because the home is normally in a physical state where it's not livable, it's not safe or sanitary, maybe it's not structurally sound. And so most of the time, your typical fixer-uppers just aren't going to pass that test, okay? Now, there are options. A different type of government loan, similar to VA in nature, that may be a beneficial loan for a fixer-upper is the FHA 203K rehab loan. That's something that we see a lot of people using. We can do those loans here at Low VA Rates. Let's talk about a third reason why you would not want to use a VA loan to purchase property. Okay, investment property, investment properties where you want to go buy a condo right next to the brand new school they just built in your neighborhood because tons of people are going to move there and you're just going to rent it out. okay? Or a rental property. You just want to rent it out to people. Once again, as I mentioned at the beginning of the video, VA loans require that you live in the home that you're purchasing and that you don't just live there for a second. It needs to be your primary residence. That needs to be your intention when buying it. So buying certain rental properties can be tricky, okay? Let's say you want to, however, purchase a duplex and you decide you're going to live in one of the units while renting out the other unit. That is possible. So that's why I say, I'm going to put a little asterisk here by investment properties, right? That asterisk means if you're going to live in part of the rental property as your primary residence, then the VA loan is absolutely amazing for that. Could even be a fourplex or a triplex. Once you get over a fourplex, you're basically getting into an apartment complex or something like that. VA loans won't allow you to do that. So fourplex is the biggest type of multi-unit property you can buy with a VA loan. If you want to get into something bigger, you're going to start doing your real estate dream and you're going to buy and, get these big properties. Usually a commercial loan or some sort of non-VA loan is the best for that. Let's talk about a fourth situation where a VA loan might not be your best option. And this is happening quite a bit right now in this market that we refer to as a seller's market. Quickly, explanation, a seller's market is where you've got way more buyers than you do sellers, and so there's this huge demand for homes, and that's what's pushing the property values up across the country. In a seller's market, it's possible the seller says, no way, okay? Seller says no. I don't want my buyer, or the person I'm selling the home to, use a VA loan. And you may say, well, why is that? Well, I hate even putting this on the list. Matter of fact, just a few weeks ago, there was a big hearing in front of, don't quote me on this, but it was either the Senate Judicial Committee or some big government body, the Mortgage Bankers Association, that's our trade group, and a lot of lawmakers that are, former military. They went and they basically debated some changes that they want to see made to the VA home loan program. Now, it hasn't happened yet, but the reason this happened is because right now, unfortunately, there are situations where both realtors, notice I said realtor. I had somebody make a comment on one of our videos that I should stop saying realtor. So if that's you watching, I can even change the way I say things from time to time. There are situations where realtors or the seller just don't want to jump through some perceived hoops or go through red tape that we try to educate you guys on. Really, there are no hoops and there is not any red tape, but sadly, these myths are out there. My job is to help dispel them. I can't talk to every single seller that has their home on the market, but you may be in a situation, especially today, where the seller just says, sorry, you can't, I'm not going to accept your offer unless you use something other than a VA loan. Now, there are ways to convince the seller otherwise. Send them to our YouTube page. Work with a realtor who's educated on VA loans, has experience, and they can normally overcome some of these objections. But they're not always going to be successful, and if they aren't, honestly, super huge bummer. It's one of the reasons why we do these videos. We are trying to change the misconceptions that are out there, and there's a bunch of VA loan myths that I try to debunk throughout the year, and you can find them if you click the link in the description box below this video. So we do hope that one day all these myths will be, they will be cleared up, that the government will change some of the rules around VA purchase loans, and there will never be a situation where a seller would want to say no to you using your hard-earned VA loan benefits. Until then, keep watching, keep sharing these videos with people that you know, and hopefully over time together we can reduce the number of people who are misinformed about VA loans. So here's the fifth and final, and one that we don't talk about often, situations where it might not be in your best interest to use a VA mortgage. And that is if you have saved up enough money to where you can afford a down payment, 20%, maybe even 10, 15%. But really, if you can put 20% down, you have 20% down, right? You've got that money, you can afford it, you've been saving. Well, in those situations, which do happen, even though you still have the VA loan at your disposal, it might be better to consider a conventional loan. The interest rate might be a little bit better. Okay, the payment might be a little bit, well, the payment's definitely going to be lower if you're putting money down because you're borrowing less money. Okay, and even if that interest rate on the conventional loan isn't better than the VA loan, because you're borrowing so much less, it could be in your best interest. And now you got to remember, VA loans do come with the VA funding fee, which is typically going to range from 1.4 to 3.6%, depending on how many times you've used your VA benefits to buy homes or to refinance homes, and whether or not you receive VA disability. So while this fee is unique to VA loans, it is sort of comparable to conventional mortgage insurance. And if you would like a more detailed comparison, make sure you check out the video that I'm linking below in the description box, and you can go a lot more deeper here. However, you always pay the funding fee, like I said, unless you qualify for exemption with your disability, while you don't have to pay private mortgage insurance on conventional loans when you've got this 20% down. So consider maybe going conventional if you've been saving up money to buy a house. Okay? Now, if you have the 20% down and you can avoid both the funding fee due to your disability and your mortgage insurance by going with a conventional loan over a VA, then you're going to want to compare the two and see which one's a better situation. If you don't have the 20% down, that doesn't mean you should delay buying a home until you do have it, because VA loans are still a great option when you don't have sufficient money to put 20% down on a home. The VA loan is a great option for that. Again, we will cover all of these in more detail in the video linked below that I already mentioned. So there you have it. Those are 5 possible situations where a VA loan might not be your best choice when buying a home. But I do want to reiterate that while these situations do exist, they are rare. 9+ times out of 10, maybe even 9.9 times out of 10, a VA loan is going to be the right choice for most of our veteran service members and their families. If you're interested in learning and seeing if a VA loan is right for you, go ahead and give us a call. We'll hook you up with one of our licensed loan officers. There's never an obligation to do more than just chat with us about your needs. We are here to see how and if we can help. Thanks for watching. We'll see you next week at the same time, and I hope you're wearing red with me.